Hello investor, hopefully you are having a wonderful time. In today's video I'm going to cover the electric vehicles. This is the Li Auto. Yes, the ticker name is LI, and this is, as you can see from they have submitted the form 6K to SEC. The company registered is Li Auto Inc. So basically using this data, as this is from the November 2020, which is the very latest data, we'll try to run the model to see whether this the price, what's the price of this stocks. Myself Pramod Kumar, I'm a CFA charter holder and FRM certified. So the reason for why I am doing this is because NIO is already doing good. The Tesla is already too high and it's crazy, and I'll just do a quick comparison with this stock with other as well, and then we'll go deep into this financials and try to find this stock's intrinsic value using the models, right? So that's the target. The reason for what I am doing is because I see a lot of hype on the stocks. So I just want to be neutral. I don't care what this candlesticks are saying, whether it's from the very short period of time, it's just boom, the stock is very volatile, and this is the 2-year chart you can see. But does it support by the financials, right? That's very important, and that's we're trying to look into this video. Okay, so if you like it, please give a thumbs up. So and subscribe if you're new. So let's get started. So just a quick comparison with these three electronic vehicles. These are under this consumer cyclic categories and auto manufacturing. Two are from China, as you know, one is from US. If I just compare from the market cap, for sure there is no doubt that Tesla is the king right at the moment, because they started very early and have the benefit of out of that as well, right, for the start early. But if you see from the PE perspective as well, for sure they don't have a earning yet, but in the Tesla is 1036 times, and the share price already split, and it's going crazy like 600, right? Again, you never know, maybe what will be next, right? Maybe, right? So but the focus here is, okay, so this is the lowest in the market cap. If you see 32.82 billion dollars, right? These are in US, and NIO is almost double, right, as seen in this price as well. So if I see from the why I picked Li today, the reason is, if you see from the price over sale ratio is crazy, right? It's 39 times. But if you see from the book value perspective, it's way cheaper as compared to the NIO and Tesla. So this means as compared to the book, it's only trading at 11 times its price. And if we compare with the cash, the price is only 11 times as well, as compared to Tesla and others, which is 3 times, or NIO is 5 times of its book value. So from that perspective, this looks pretty cheaper as well, right? And if I see from the next year earning per share, its forecast is 53% higher than even NIO, right? So I looked into the company website. The vehicle looks quite promising as well. So maybe just quickly before I go into the deep down, just let me will show you that as well. So if I go to, so this is the financial page where I getting the data. Yeah, this is, so just look at this one quickly. So this one is the vehicle looks nice, and yeah, so feel free to check it out. Yeah, looks nice SUV, right? So yeah, this is the LIXING. This is the website. I just want to tell you that. And the information which I have used, it's from this their latest quarter, right? So that's here. So I don't, feel free to check it out on this website. Okay, so from the book and the cash, it looks cheaper. Okay, so this is the stats which I have cut. So maybe I'll go directly. Seems like I didn't get the the proper cut. Okay, so if we see from here, so you can easily see that the vehicle sales is increased, right? So this is the latest and this is the old one. So it's increased to almost 20%, so which is very good, right? And the total revenue is also increased. And total revenue is increased to a 28.9% quarter over quarter. Interestingly, the gross profit, not only the gross profit increased, but its margin itself is increased, which is by 6.5%. So, which is also amazing, right? The gross profit margin was second quarter was close to 13.3 actual, and now it's close to 20%, which is not only an increase of the 6.5% the gross margin. And look at here the bottom, the free cash flow, right? The company has 150% free cash flow, which is amazing. So if I see from the earning per share, the earning per share is right now negative. The analysts expect this to be consistent negative, and then it's dropped from the first quarter of 2021 and significantly drop means the company doing better, so that's why the negative amount is increased. And by 2022 or 21 fourth quarter, I expect the earning to be positive as per this chart, right? So that's how it's going. Okay, so before I go to the intrinsic value to calculate the actual price of the share, let's quickly look into the business, the outlook. The fourth quarter of 2020, the company, this is directly from there what they have submitted to the SEC. The company expect the price, the vehicles sold. Look at this number, right? Because the 11,000 to 12,000 vehicles sold, right? Which is increase of 27% to 38.6% from third quarter, right? Look at the jump. And the total revenue, look at this one. This is they're saying they will increase from 23.9 to 35.1% from third quarter. This means going to the fourth quarter. So this is just the next quarter projection the company is doing, which is from 457 to 499 million. So I have used this number and in the projection, but not exactly, but a little bit conservative numbers, right? So let me share bring the spreadsheet so I can share that piece with you. So here is my net revenue model. So this is on the quarterly basis, and then I'm doing the 10-year forecast, right? So if you can see, these are the reported number too. And so these are the deliverable vehicles, right? I'm projecting. Okay, so I'm projecting by 2021 they should be selling around 87,800 vehicle but if you can see from here, this is 27 to 38% growth rate, but I'm only taking 23% year quarter over quarter growth, so which is also very conservative side, right? I'm going very conservative in this one and try to see what is my actual price is. If I see from the revenue growth, the revenue growth is from March to June. It was from the March to June, you can see here is 202% growth, then 125% growth. But in the last quarter, it was significant drop to 32% growth. So, and the company is also saying their growth for the next quarter is 23.9 to 35. So this range, right? So what I have done, honestly, I have taken even the 23.5% growth here, and then I project the sale for the next year, even below 40 basis point from their lowest perspective, just to be on the safer side, right? And then this will be there when I do the total. This will be there next year, 2021, the revenue in millions, right? So this is $3.1 billion because 3,124. Okay. Again, I am taking the growth rate of 23.5 as that's shown, and then I'm decreasing this growth rate to 15% for the longer term. Now you might, some people saying why you are doing it, just to be conservative, right? Because nobody can maintain maybe such a growth rate. Maybe the things change, they have a more factory, more run up, so they can increase, but at the moment now they are in very initial stage, right? So I just want to be conservative on that. So that's one piece. The second piece is I also want to show here, maybe I'll zoom it so you can see a little bit. If you can see there, so I'm not even, I'm dropping the growth rate year over year. So this doesn't mean that I'm taking a consistent growth. Every year I'm shredding this growth rate, okay? And then I'm selling this company just like any other normal auto company. I assume after 10 years, many people will be driving the electronic cars, so there won't be any like a buzz right now what's happening, and it should be a normal, right, to drive those cars. So it will be trade like two times of hopefully should be a sale. And for the discounting, I'm taking the 15%. You might say, okay, why taking 15%? Why not just take S&P, which is 10%? The reason why I'm taking 15, which is a higher 5.5% more, because this is still a new company, and I just want to be more conservative in terms of the risk which I am planning to take. If I take all those factors in and then project the growth rate, the revenue by this growth rate, and then discount each period of the revenue with the 15% discount rate for the next 10 years, then can you guess what will the price come? So the total market cap and the price, so the total market cap after 10 years will be like 327 million, right? So $40.3 billion. And the market right now, the share outstanding is 836.34. And if I divide by this total market price, I got all $48.22 in terms of the my price. So that's one scenario, right? With this conservative, with the lowest revenue growth rate, which is this, right? Even less than this. Let's take the average. What will be if I go into the between, right? Let's go to 30. If I change to 30, right, this one, then what will be my price? Then my price in that scenario will be $56.66, right? You never know, next quarter can be, right? Now I'm in that's my average, right? So what will happen? So the average scenario, maybe I should write it here, right? So easy. So average scenario, the price is 50, let's round it up to $57, okay? And so I'll take this one, right? And okay, now I was not planning to do that, but while I was doing this video, I thought, why not just do that as well? So this was conservative, right? Conservative, and on the high end, which is just more aggressive, right? Let's see on the both side. So what was on the low side? So it was 23.5, it was 48, let's do $48, just a round figure, right? And if I do the high side, what's the high side is 35. Let's take 35. So on the 35, if I take the 35, then my price is coming as $64, right? So these are my three price right now. And right now the share price is 39. My understanding is the share price should go up because I'm very conservative in their approach. And honestly, if the market continue to have the momentum on electric vehicles, then it can also reach $64, right? So that should be, so it's all depend upon you, right, how you are taking, but at least it should be clearly, even if I go conservative, it's lower, right? Okay, so that's on this side. So let's continue our journey. Or don't forget to subscribe and like this video. One of the more reason I am also strong. Yeah, and in the opinion, let me know what you think about this analysis, and if feel free to check other video as well, and don't forget to like and subscribe. One more point, very important points I like to share with you. Okay, I have already covered the models. Ta-da, this one. So you can see with the last quarterly institution transaction, these are the sale, and this is why I haven't seen any selling of the stocks. You see, these are the big institution, right? UBS, Fidelity, right? Bank of America, Morgan Stanley, UBS Asset Management, Credit Suisse Securities, 10 million shares, right? 10 millions, right? Shares bought. These are not number, these are shares. 5 plus 5 plus 5 plus 4 plus 3. So it's so many. UBS Security bought 1.8, then they bought from their asset management Switzerland side, they bought 5.9 million as well. So this means its institution is start buying. They have a huge trust in that. So that's also give another boost to the stocks, right? So these are the fact. Those are the models saying, and rest you are smart as well. So let me know what you think of this stock as well. Feel free to put in the comment if you like. Don't forget to smash that like button, and yeah, let me know which one is your favorite electronic vehicles, and are you bullish on the Lee investment or not. Thanks for watching. Bye for now.